On behalf of Lincoln Financial, we would like to welcome you to the Eisenhower Health 403B Retirement Plan Orientation. Normally, one of the four of us would be here with you discussing your 403B plan features and options. Myself, Dennis, with the help of my associates Zach, Art, and Akira, will spend approximately the next 20 minutes providing information to help you understand all the opportunities and benefits that Eisenhower Health provides you inside your 403B retirement plan.
Thank you, Dennis. Now I'm going to talk about the agenda for today. We'll go over how much to contribute to your plan and some of the features of the plan, like auto increase per year so that you can retire with a healthy income base, who you might choose as a beneficiary depending on if you're married or single, how to create your own portfolio or how to take advantage of the lifespan asset allocation models, and then how to enroll, how to complete an easy enrollment form, or how to apply online. Why bother saving? To maintain the standard of living that you have now when you retire, we have to look at your potential income sources so we know how much for you to save, what your Social Security will be, pension if you have one, and then we can calculate how much you would need to save in your retirement plan. These are all important because people are living longer and things will cost more from the impact of inflation, so you would need more money to reach financial independence. After you've started the 403B plan and would like a more detailed approach to planning, we can help you identify all these resources. How your retirement plan works at Eisenhower. Contributions come out of your paycheck in a percentage or dollar amount, and then they're contributed to your 403B plan, which then are placed in your investments to grow. And this is the easy enrollment form to start your plan. All you want to do is fill out your basic information here in the top column. And then if you don't know your work information, you don't need to fill it out. Now Zach's here to talk to you about how to contribute to your retirement plan.
Thanks, Art, for that. So today I'm going to be discussing contributing to your retirement plan. Everybody should be contributing so that they can have a comfortable retirement, but we really wanted to dive into some common questions that everybody has, like how much should I be contributing to my retirement plan? Should I be putting in pre-tax or Roth contributions? Should I use automatic annual increases? Questions like that. So the first thing that everybody should know about the Eisenhower plan is that Eisenhower is being really generous in giving you a 5% match. So if you put in 5% of your paycheck, whether that be pre-tax or Roth, Eisenhower is also going to match you and put in 5% of your paycheck, but they're going to put it in pre-tax. However, many of us are going to need to put in more than just 5%. In fact, you may need to put in more than 5% to comfortably reach retirement. The IRS allows you to put in up to $19,500 for 2020. This number can increase every single year depending on if the IRS increases that limit. In addition, if you're over 50, you're allowed to put in an extra $6,500 for a total of $26,000 annually. Only your contributions count towards this limit, not Eisenhower's 5% match. So we know you'll most likely need to put in more than 5% to reach retirement comfortably. However, you might not be able to put in that maximum $19,500. We typically recommend that you aim to be putting in somewhere between 15 to 20% of your paycheck. With Eisenhower putting in 5% for you, that means that you should be putting in somewhere between 10 to 15%. Now, we know that you may not be able to start with 15% of your paycheck, so Lincoln's included in an auto escalation in your plan to help with that. Essentially, you can choose to start at a lower contribution number, like 7 or 8%. We always at least want to do 5% so you get the full match. But let's say you start at a contribution of 7 or 8% and you eventually want to hit that 15%. You can have your contribution automatically increase 1 or 2% annually until you reach that 15%. So in this example here, we have somebody who's making $1,500 every single paycheck. They're investing for 30 years and they're getting a 6% rate of return. If they never increased their contributions, they would have ended up with around $230,000 at retirement. Not too terrible of an amount, but if you consider the fact that if they increased by 1% a year In this case, 1% for them was $15 per paycheck. They would have more than doubled their amount and ended up with $565,000 in retirement. We really encourage you to take advantage of this feature since it really helps people get back on track for retirement. Now, when you put money in the plan, you have a choice of whether or not you want to contribute money from your paycheck on a pre-tax, Roth basis, or both. Either way, you're still going to get the match. Pre-tax contributions are when you put in money before taxes. Contributing this way will lower your income for the year, so you save on taxes now. However, when you retire and you start taking money out of your account, you're going to be taxed on it then. With a Roth contribution, you don't save money on taxes now, you're not lowering your income. They go in on an after-tax basis, so you've already paid taxes on it. In exchange for paying taxes now, your money grows tax-free, so that in retirement, you don't pay taxes even on the growth of your money. So let's take a deeper look at the pre-tax contributions. In this example, we have someone who's making $1,500 per paycheck before taxes, but after taxes, they're getting around $1,069, about 25% of their paycheck getting taken out. By putting in 5% or $75, they don't actually have to pay taxes on that $75, and therefore it affects their take-home pay less. They save about $19 in taxes, so they only feel $56 come out of their paycheck instead of $75. A lot of people ask us whether or not they should be doing pre-tax or Roth contributions. There's no one right answer, but the guidelines are essentially when you want to get taxed on your money. Pre-tax contributions avoid getting taxed today, but you're going to get taxed in retirement. Roth contributions, you pay your taxes today, but you're not going to pay taxes in retirement. In general, if you're younger and in a lower tax bracket, Roth contributions tend to be good for you since you're most likely going to pay more taxes in the future. If you're older and you're making more money, you might see your income go down in retirement. So paying taxes later might make more sense, i.e. pre-tax contributions in this case. We really encourage everybody to start saving as soon as possible, preferably by turning in your enrollment forms today. Saving for a longer period of time will help you grow your retirement savings more than trying to catch up and save more later. So let's take a look at the scenario. Here we have Miguel and Alyssa. Both of them start working at the same time. Miguel starts contributing right away and putting in $150 per month for 40 years. So he puts in a total of $72,000 over 40 years. Alyssa, on the other hand, decided to go and wait for 10 years. She realized, however, that she needed to catch up, and so she decided to put in $200 a month for 30 years, totaling $72,000. So they both put in $72,000. It's just Miguel did it for 40 years and Alyssa did it for 30 years. However, because Miguel started contributing earlier, his money started getting compound interest sooner. So Alyssa, starting 10 years later, ended up with almost $200,000, while Miguel, starting right away, ended up with almost $100,000 more, with $300,000 total. So when you're filling out your enrollment form and you're trying to figure out how much to contribute, we typically recommend trying to save 15 to 20%. You would put in either a dollar amount or a percentage of what you want to contribute, and then determine if you want to put in either pre-tax or Roth contributions or both. You can do a little bit of both contributions if you wanted to. If you wanted to use the auto escalation below the contribution amount, you would put something like starting on January 1st of 2021, I would like to automatically increase my contributions by 1% a year until I reach 15% per pay period. There's a section right below that you can fill out with language similar to that. So the last section we're going to fill out on the enrollment form is beneficiaries. Beneficiaries are who you want to receive the money if you were to pass away. Primary beneficiaries are the first ones to receive the funds if you were to pass away. And if all of your primary beneficiaries have passed away as well, or maybe you guys pass away at the same time, your secondary beneficiaries would receive it. Since California is a community property state, If you're married, you have to put your spouse as 100% primary beneficiary unless they go and sign off on it. So if you're married and you have 2 kids, you could put your spouse as 100% primary beneficiary and then your children as 50% each as contingent beneficiaries. We only need their name and date of birth. So if you don't know their social security, that's entirely fine. Once you have all of that, don't forget to go ahead and sign at the bottom and date it. And then you can turn it in after Dennis is done here talking about the investments. So before I pass it off to Dennis to discuss the investments, I want to mention some other quick features of the plan. So first off, everybody is eligible to participate and get the match. This includes full-time, part-time, and per diem employees. So we really encourage everybody here to be signing up because that's free money that Eisenhower is giving you. On the match, there is a vesting schedule. Basically, what this means is that all the money you put in the plan is 100% yours, no matter when you leave or when you decide to retire. However, Eisenhower's contributions are vested. So if you end up leaving Eisenhower after only working for 1 year here, you're going to keep 20% of what they put in. If you leave after 2 years, that would be 40%, and so on and so forth until you've been here for 5 years and you're 100% vested. Lastly, there is a loan provision. So you are allowed to take out a loan up against half of your contributions, and all the interest that you pay on that loan goes back to yourself. It's a really great source if you need money temporarily and you know you can pay it back quickly, or if you're looking to put a down payment on a mortgage. So now I'm going to go and turn it over to Dennis so he can go and talk about the investments in the plan.
Now that we've reviewed your options inside your 403b, let's talk about some financial concepts. First, we'll talk about dollar cost averaging. Normally, at Eisenhower Health, you would have 26 pay periods, but to keep this concept simple, we're assuming contributions just go in once per month. In this example, a participant contributes $200 per month into their plan and invests into the market. In the third column, you can see the current unit price. This price can fluctuate as investments can increase and decrease on a daily basis. We can see that in January, a contribution of $200 at a price of $25 per unit would purchase 8 units. But later in the year, for example, May, when the market fell, a $200 investment at $18 would purchase 11.1 units, over 3 more units than in January. In this example, we can see that the market steadily decreased throughout the first 3 quarters of the year. At the end of the third quarter, you may receive a statement showing that the total value of your account is $1,665, but your total contributions year to date are $1,800. This represents a decrease in value of over $150. But the good news is that while the market was going down, you were able to purchase more units as they were lower in price than in January. Next, let's add the last quarter of the year and see what happens when the market recovers to where we started from at the beginning of the year. As we can see, the unit price in October, November, and December slowly increased back to the original $25 that it was in January. At the end of the year, we now have 126 units and have invested $2,400. But because we have units that were purchased at a lower price, the total value of the account is now $3,150. This is an increase of $750 simply because we continue to invest while the market was fluctuating. So sometimes while we are in the accumulation period and growing our assets, a decrease in the market can help us add wealth to our account. Next, let's take a look at the funds that are available for you to invest inside your 403b. We can see that there are 4 main types of investments. The most aggressive at the top include international stock and emerging markets. Second, there are 2 U.S. stock investment options, the REIT or Real Estate Investment Trust and the Total Stock Market Index. Third, and more conservative, we have 3 bond options, an inflation-protected bond option, a high-yield bond index, and the Total Bond Market Index. And finally, the most conservative is the cash or stable value option that has a minimum rate of return of 1.75%. Normally, people don't put all their investments in any one of these options, but in a mix often called a portfolio. Here we can see that over time our mix or portfolio may change. When we are close to retirement, we often want more conservative investments represented here as cash and bonds. But when we have a long time to retirement, say the year 2040 or the year 2045, we will see that our allocation will consist of more stock or equity investments represented here in gray. But don't worry, you don't have to make all these decisions on your own. Your Eisenhower Health 403B has specific models built for you. Each one has a year, and we call that a target retirement year. So for example, somebody retiring this year may be invested in the 2020 model, while somebody retiring in 30 years may be invested in the 2050 model. They both contain the same investments, but the 2050 model has more stock or equity investments than the more conservative 2020 model for someone who's preparing for retirement. Please note that these portfolios will automatically adjust for you and will slowly become more conservative as you approach retirement. In addition to having portfolios based on target retirement years, each 5-year increment comes in 3 styles: conservative, moderate, and aggressive. So for example, 2 people retiring in 30 years may both invest in the 2050 model, but one individual may choose to be in a more conservative model or a more aggressive model, depending on their own personal risk tolerance. You have the option to make this decision, but the default that your plan uses is a target retirement age of 65 in the moderate option. If you would like to make any changes from this default, please let us know.
So at this point in the presentation, we would open up the floor to get any questions that you guys might have. However, we're not there in person, so I wrote down some of the most frequently asked questions instead. The first question that we always get is, what should I do with an old 401k, 403b, 457, or an IRA? What should I do with these old employer retirement accounts? Well, in this case, you do have a few options. 2 popular solutions are to roll over and consolidate into either the Eisenhower 403b or into a traditional IRA. Which option's better? It depends. There's benefits to each. If you want to sit down and discuss with us which option is better for your own unique situation, we can set up a Zoom or a phone call appointment. Our contact information will be available in a couple of slides. Now, another question we often get is, how do I enroll into the 403b so I can start saving money immediately? The most convenient way is to fill out that easy enrollment form, which you should have in front of you right now. I would try to get this filled out before you leave the room today. That way you can turn it in and you don't have to worry about it anymore. Be sure to sign and date the bottom. If you have any questions or concerns about the enrollment form, please contact us either by phone or email. Now, typically in a COVID-19 free world, we would be in the Eisenhower cafeteria every Monday from 11 a.m. to 1:30 p.m. to help you fill out these forms and answer any other questions you might have. However, right now we can't come into the hospital, so a good alternative is to give us a call or send us an email. At this point, I would recommend that everyone actually pulls out their cell phones to take a picture of this last slide. This slide contains all of our contact information, so use this like a business card. If you have any questions or concerns regarding the retirement plan, a rollover, or anything else within your financial picture, please don't hesitate to reach out to us. We are here to help to make sure that your financial life is well organized and to keep you on track to accomplish your life goals. Thank you for your time today, and welcome to the Eisenhower family.
Hi, I'm Jeff Perala. I'm the Compensation and Benefits Specialist here at Eisenhower. And over the next several minutes, I'll talk to you about our benefit programs and benefits that are available to you. First, the enrollment process. You will receive a business process in Workday for Change Benefits New Hire. We ask that you complete that within the first 14 days of being hired. You will be required to have Social Security numbers for yourself and any dependents that you enroll. This is for life coverage also. You will be asked to designate beneficiary, one or more, for the Eisenhower Health supplied life and AD&D coverage. This will be your only chance to make benefit changes until the next open enrollment in April of next year for a July 1st start date, unless you have a qualifying life event. Qualifying life events are things such as marriage, divorce, birth or adoption of a child, and so on. Please remember that if you do have a life event, you have to make your benefit elections within 30 days of that event, or you'll have to wait until the next open enrollment. Your coverage will be effective on the 31st day of employment. Eisenhower is concerned or would like to help you with your wellness. This includes physical, mental, and emotional well-being. To assist in this, we supply at no cost to you an EAP, an Employee Assistance Program. You can call the EAP for consultations regarding child or elder care, legal inquiries, finance counseling, nutrition, fitness, smoking cessation, and stress. The contact information is here on the bottom of this slide. All the contact information that you'll see on the upcoming slides can be found on ICNET under Human Resources, Benefit Information, in a document called the Employee Guide. The last page of that guide has all of the contact information there. We have a 5-star wellness program. It's health coaching and employee wellness. We partner with a national company called Trestle Tree. They provide counselors to help you progress through your wellness goals. They provide coaching, activity classes, nutrition counseling, weight management, and education regarding wellness. Again, their contact information is here and also found in the back of the employee guide. We have one medical plan at Eisenhower. It is associated with the Anthem Blue Cross PPO. Within that plan, there are 3 tier levels. Tier 1, if you decide to enroll in the medical plan, if you use an Eisenhower provider and or clinic, that is your best cost share advantage in this plan. If you are not able to use an Eisenhower health provider or clinic, you should look for an Anthem Blue Cross provider. That is a tier 2, there'll be a deductible and copays associated. If you go to a provider not in the Anthem plan and not affiliated with Eisenhower, you'll pay a larger deductible and larger coinsurance amounts. As a new hire, you can elect the wellness premium if you're not a tobacco user. As you see here, you must attest that you are tobacco-free, and in future enrollment periods, you agree to participate in the biometric screening, and if applicable, do any course of action prescribed to you based on that screening. Much more information is provided about our wellness program throughout the year and during open enrollment in April. Anthem Blue Cross PPO. You can find providers for this network on the Personal Choices website. It is a link through ICNET. You can find Eisenhower physicians and clinics, as well as Anthem PPO providers and clinics. If you have coverage elsewhere and you decide to waive the medical coverage at Eisenhower, you do receive a $35 credit per pay for full-time employees. If you do have coverage, generally through a spouse or registered domestic partner, you may be eligible to participate in what we call Complete Care. It is a medical expense reimbursement plan, or MERP. You would have coverage through your spouse's group plan, and you may be eligible to have all of your out-of-pocket expenses reimbursed through you. And if the premium that you pay or your spouse pays to have you on their coverage is more than what you would pay at Eisenhower, you may be eligible for reimbursement of a portion of that premium. If the other plan is a high deductible health plan with a HSA, a health savings account, if it is Medicare, TRICARE, Medicaid or Medi-Cal, or if it's an individual policy through the healthcare exchange, it is not an eligible plan under Complete Care. For more information on this, you can contact Human Resources and they'll help you determining if you're eligible. We have one dental plan at Eisenhower, Delta Dental of California. Again, a PPO plan. By providing or selecting an in-network provider, you get your best cost share when receiving services. There is an annual benefit of $1,500 per covered employee or dependent annually. Orthodontia care is covered at $1,500 per covered employee dependent. That is a lifetime benefit. Provider lists in network can be found at deltadentalins.com to find a provider that is in network. If you decide you do not wish to enroll in the dental plan, there's a $5 credit per pay that you are given to waive the dental coverage. Vision Service Plan, VSP. Again, one vision plan. Again, in-network, out-of-network benefits. Your best cost share is going to be finding an in-network VSP provider. It does give you vision exams annually that are covered. You can get lenses every year, 12 months. You can get new frames every 2 years. Or if you prefer contact lenses, you can have contact lenses instead of the lenses every 12 months. Flexible spending accounts. A flexible spending account, or FSA, there are two types of those. There's a healthcare reimbursement account. This account can be used to reimburse you for out-of-pocket expenses that you pay. Deductions are taken from your paycheck on a pre-tax basis and held in a healthcare FSA account. When you have expenses that you need to pay, you can use a debit card that's provided to pay a copay or coinsurance, pharmacy copays. Some over-the-counter products are also available on the healthcare FSA. There's a maximum of $2,750 per plan year. And the one thing to keep in mind, this plan does not roll over unused portion of this account year to year. It is an use it or lose it plan. So you must consider what your out-of-pocket expenses may be and try and calculate how much you want to save pre-tax into this account so that you wind up at zero at the end of the year. The plan year does run July 1st through June 30th, as all of our plans do. Please keep that in mind. It is not a calendar year plan. The other FSA account is a dependent care reimbursement account. This account is for child care services for dependents 13 years of age and younger that allows you as a parent and or your spouse to go to school or go to work and use pre-tax money you put into this account to pay for child care services for your children. It does have a maximum of $5,000 annually. Again, it is an use it or lose it account. So again, calculate what you think your child care services are going to be. You can have that money deducted from your pay on a pre-tax basis and use that money to pay for your child care expenses. For both accounts, there is a $250 minimum amount. Life insurance. Eisenhower provides you 1 times your salary up to $50,000, which is paid by Eisenhower Health. You can also apply and elect supplemental life insurance paid by you, the employee. As an employee, you can request up to 6 times your annual salary to a maximum of $1.2 million if you provide a statement of health. As a new hired employee, you are guaranteed up to 3 times your salary with no medical questionnaire. You can also elect supplemental life for your spouse in increments of $5,000 up to $150,000. There are maximums to this. You have to elect employee supplemental life to elect either spouse and or children life. There is a guaranteed issue as a new hire of $20,000 for your spouse with no medical underwriting. If you request more than that, you will receive a questionnaire regarding medical questions for your spouse. You can also purchase supplemental child or children benefit. It's a $5,000 per child benefit. It is the same cost regardless if you have one child or 3 children on that benefit, and it is $5,000 per child should that child pass. If you decide not to elect the supplemental insurance as a new hire, any increases or new enrollments will require you to provide evidence of insurability or personal health information to the Hartford for evaluation to get into the plan. AD&D insurance, accidental death and dismemberment. Eisenhower provides $3,000 in AD&D coverage at no cost to you. You can purchase additional supplemental coverage that's paid by you. You can have a maximum up to $500,000, but no more than 10 times your salary. You can also elect AD&D coverage for your spouse or domestic partner, for any combination of your spouse, RDP, and children, or just your children. And the benefit levels vary as shown on this slide. The percentages are of the coverage that you elect. So if you choose a spouse, RDP, and children, and a $500,000 AD&D supplemental plan, if something should happen to your spouse or your child, they would receive a 50% benefit under the AD&D, accidental death and dismemberment supplemental insurance. Long-term disability. Supplemental LTD is paid by you, the employee. It will provide 50% of your basic monthly earnings up to $6,000 a month. As the title suggests, this is long-term disability. There is a 180-day waiting period, which means you would go through the short-term disability state program. If you remain disabled past that period of time, you may be eligible to begin the long-term disability payments should you elect this. We also offer Trustmark voluntary coverage. These are universal life plans, and they are tied with long-term care and other attributes of private insurance. We offer a critical illness coverage through Trustmark, and we also offer an accident insurance through Trustmark. If you would like any information regarding these plans, the contact information is here to speak with a Trustmark counselor and enroll in those voluntary programs. You will not see these voluntary programs on your open enrollment business process. These are separate benefits that you coordinate directly with the Trustmark if you're interested in signing up for them. Should you have questions about any of the benefits or programs that I've talked about today, please contact the Human Resource Department at extension 8500, and we'll be glad to help with any questions you may have concerning your benefits. Thank you.